Welcome to the Deep Dive. Today, we're jumping right into a really volatile space, urban air mobility. And we're focusing tightly on Eve Holding Inc., that's EVEX, breaking down their Q3 2025 earnings call. Lots happening there.
That's right. And our mission today is pretty clear. Cut through the noise, analyze the financials, sure, but really dig into the operational reality. For a company like Eve, still pre-revenue, it's all about execution.
Exactly. It's not about sales yet.
Not at all. It's about risk. So we need to figure out what really matters for you, the listener, especially with that, let's be honest, very ambitious 2027 certification target looming.
Yeah.
You know, the quarter showed progress internally, discipline even.
But the market kind of shrugged.
Yeah, the reaction was subdued,
Yeah.
which just tells you the story isn't financial anymore. It's all engineering, all certification now. Can they build it and get it approved? That's the question.
Okay, let's hit the highlights then. The financial snapshot, as we expected, still pre-revenue, $0 reported for Q3.
Yeah, zero revenue. But the expenses, they tell the story. The GAAP EPS actually came in slightly better than expected, -$0.14 versus estimates of -$0.15.
A small beat.
A very small beat. And despite that, the net loss, it actually went up year over year, climbed to $46.9 million from about $35.8 million last year.
Which sounds bad, but in this context, maybe isn't, because it shows they're spending.
Exactly. That's the key insight here. Look where the money went. Almost all of it, $44.9 million straight into R&D. That's them building the thing, integrating systems.
Moving metal.
Precisely. And only $7 million on SG&A, selling, general, and admin. So they're keeping overhead tight while pouring fuel on the development fire. It shows the program's accelerating, just like they said it would.
Okay, so they're spending where they should be. They slightly beat the EPS estimate, but the stock reaction was, well, negative, down about 5.3% pre-market, finished the day slightly down too. What's the read-through there?
Well, it signals that, just managing the cash burn a little better isn't enough anymore. Investors aren't just worried about money. They're worried about the actual timeline, the technical hurdles.
They want to see progress on the plane itself.
They want tangible proof, milestones hit, not just financial shuffling. They've defined the problem. Now they need to show the hardware solution is real.
Right. So burning cash to hit that future date, which brings us to liquidity. For a company at this stage, cash isn't just king, it's everything. How did they shore up their finances?
Yeah, this was maybe the biggest non-operational news. They pulled off a successful $230 million registered direct offering back in August.
And that wasn't selling shares to just anyone, right? This was targeted.
Exactly. This was a direct sale, mainly to big committed players. The Brazilian Development Bank, BNDES, and crucially, their own controller, Embraer. That kind of placement usually signals strong insider confidence.
And the impact on the balance sheet was immediate. Record cash.
Record cash. They ended Q3 with $411.7 million in cash and investments. And if you throw in the BNDES credit lines and some grants they have access to, total liquidity is actually $534.3 million. Very strong position.
Okay, $500 million in liquidity. But how fast are they burning through it? What was the discipline like?
They showed good control. Quarterly cash consumption was $60.7 million. If you look year to date, they've used $143 million. That's actually tracking towards the low end of their guidance for the full year, which was $200 and $250 million.
So they're being efficient with the burn.
They are. But let's put it in perspective for you listening. $60 million a quarter. That's basically running a $1.5 million per day R&D operation. It's a huge bet on hitting that development timeline before the cash runs out.
So what does management say this means for their runway? How long does this cash last?
They were quite confident on the call, stated very clearly that this liquidity gets them through 2027. It funds everything operations R&D right up to that target certification date.
So they've effectively bought themselves time.
They have. They've taken that near-term financing risk, that constant pressure to raise more money, off the table for the next couple of years. That's huge for these kinds of aerospace ventures.
Okay, money problem solved, at least through 2027. Big question now. What did that spending actually achieve? What about the hardware? What physical progress did the CEO point to?
Right, the proof points. They said the full-scale engineering prototype is really coming together. All the electric motors have been received. They're installed.
Okay.
And they've completed some key integration tests, like getting the communication link working between the aircraft systems and the remote pilot station. That's critical.
And the big one everyone's watching, first flight. Did that timeline slip at all?
Nope, they reiterated it.
Yeah.
First flight is still targeted for the end of this year, 2025. or maybe early 2026.
Okay.
That's the moment of truth, really, when
Yeah.
we go from PowerPoints to actual flight data.
They also talked about tools to speed things up, specifically this Ironbird cockpit thing. Said it's already logged over 10,000 hours. Why is that ground testing setup so important?
The Ironbird. Yeah, it's incredibly valuable for efficiency. It's basically a full mock-up on the ground of all the plane's electrical guts and systems, but it doesn't fly.
So you test everything without leaving the ground.
Exactly. You can validate super complex stuff like the flight control software, those fifth-gen fly-by-wire laws running at 24/7. It means they can find and fix a ton of integration bugs before the actual prototype even rolls out for flight tests.
Which saves a lot of time and money in the long run.
A huge amount. Flight testing is incredibly expensive, so doing as much as possible on the ground first just makes sense. It de-risks the whole campaign.
Interesting. And they also leaned into the Embraer connection, announcing Embraer will make the landing gear. What's the thinking there? Seems pretty basic, but they highlighted it.
It sounds basic, but it's about operational reality.
Yeah.
Those wheels aren't just for landing. They're for taxiing around on the ground at vertiports.
Instead of hovering to reposition.
Precisely. Hovering eats up battery like crazy. Using wheels is way more energy efficient for short ground movements. Plus, and this is maybe more important, it means you don't need specialized ground support equipment like tugs to move the aircraft around. Faster turnarounds, simpler ground operations. It's practical.
Makes sense. And was that landing gear supplier the last big piece needed for their main supply chain?
Yeah, they confirmed it. That was the last major system supplier announcement. Their primary network is now complete, about 22 key partners. And management stressed a couple of things. These are lifetime agreements, and importantly, they haven't single-source critical components.
So they have backups.
They have alternatives lined up. It's all about de-risking that production ramp-up when or if the orders start needing fulfillment at scale.
Okay, speaking of orders, let's talk commercial momentum. They reiterated that huge backlog number again.
They did. It's still around 2,800 pre-orders.
Right.
They put a value of roughly $14 billion on that based on current list prices. But here's a detail I thought was significant. They specifically called out $1.6 billion of that backlog is already secured contracts for their aftermarket services package, Eve Tech Care. So that's things like maintenance, support, data services for the first few years.
Locking in service revenue already, that's smart.
It's very smart. Shows they're thinking about the whole life cycle, not just selling the aircraft. That recurring revenue is gold in aerospace.
They also mentioned expanding internationally, a new deal in Bahrain. What's that about?
Right, a new framework agreement with the Kingdom of Bahrain. This basically sets up Bahrain as a potential early adopter hub in the Middle East. It covers cooperation on regulations, operations planning, infrastructure. Think of it like creating a sandbox environment.
A place to test things out?
Exactly. And the agreement even includes the possibility of doing test flights there in 2027, which could pave the way for launching commercial services in the Gulf region relatively quickly after they get certified.
Okay, back to that certification, 2027. It just feels tight. Aerospace programs are notorious for delays. What gives them confidence beyond just having the cash now?
Well, a lot of their confidence seems pinned on regulatory strategy. Their primary certification body is ANAC, the Brazilian authority. That's step one.
But they need the FAA, EASA.
Right. And that's the key. They claim they're working extremely closely with ANAC now to make sure the certification basis aligns as much as possible with what the FAA and other global regulators will require.
So do the work up front to avoid delays later.
That's the goal. Try to streamline those subsequent validation processes around the world, rather than getting certified in Brazil and then spending years trying to get everyone else on board. It's ambitious, but it's the only way 2027 works realistically.
And if they do hit 2027 and that $14 billion backlog starts firming up, can they actually build these things fast enough? What's the production plan?
It's designed to be modular, which seems sensible. They'll start with capacity for 120 eVTOLs per year at their facility in Brazil.
Okay, 120 a year.
But they say they can double that to 240 pretty easily just by adding a second shift.
Mm-hmm.
And the plan allows scaling up to 400 NE units per year eventually, with relatively modest extra investment, like $100 million to $150 million total incremental capex.
So flexibility, start small, ramp fast if needed, without huge upfront costs.
Exactly. Keep the initial capital outlay manageable, preserve cash, but retain the option to scale significantly if the market takes off like they hope. So pulling this all together for you, the listener, the big picture is money's secured through 2027, yes. But that flat market reaction tells us the focus has completely shifted. Investors are laser focused on execution risk now.
Right. They need to see the engineering milestones being hit. So what are the absolute key signals the market is waiting for in the next, say, few quarters?
I'd point to four main things. First, obviously, that prototype first flight, success there, and crucially, releasing some positive early flight test data. That's number one.
Okay. What else?
Second, they need to publish that detailed Brazilian certification plan. Management still expects that by the end of this year, 2025. That adds credibility to the timeline.
Makes sense. Third,
we need to see something concrete come out of that Bahrain agreement, like actual pilot projects for infrastructure or specific regulatory steps being announced makes it feel real.
and fourth.
Finally, the update on their projected cash spend for 2026. As testing ramps up, that burn rate is likely going to increase, maybe towards the higher end of previous thinking. They need to guide realistically on that.
Got it. So it's a clear divergence, isn't it? Management sounds confident they've got the cash, but the stock is basically saying, prove it. Show us the plane flying, show us the certification path clearly, then we'll talk about a re-rating.
That sums it up perfectly. Execution's everything now.
Okay, and that brings us to the part of the deep dive where we offer up an outrageous, but maybe plausible, trade idea based on what we've heard. Quick reminder for everyone listening, this is absolutely not financial advice, just exploring possibilities.
Right. So the core idea here stems directly from that cash situation. They have $411.7 million. Management says it lasts through 2027. That liquidity provides a kind of, well, a safety net or maybe a floor under the stock for a while.
It guarantees they survive long enough to face the big tests.
Exactly. It guarantees they live long enough for the binary event.
Yeah.
Either the prototype flies well and certification looks achievable, or they hit a major technical wall, failure or success.
Okay, so you've got a relatively high floor because of the cash, but the potential outcomes are extreme, either validation leading towards that huge backlog or a major setback. Massive potential upside or downside.
Precisely. It screams volatility. So given that setup, a defined cash runway limiting the immediate downside, but huge potential swings based on future technical outcomes, one structure that becomes plausible is a long strangle.
Explain that simply.
You're essentially buying insurance against a big move in either direction. You buy call options, betting the stock goes way up, and you buy put options, betting the stock goes way down, both with expirations out towards that 2027 timeframe.
So you don't care which way it goes as long as it moves a lot.
That's the thesis. The huge R&D spend means failure would be dramatic. But success starts to validate that $14 billion backlog almost instantly. You're paying a premium now, strangles aren't cheap, to bet that the secured cash runway guarantees the company survives long enough for one of those massive binary moves to actually happen. You're buying volatility.
Playing the engineering lottery, but with a known time limit thanks to the cash. Interesting. High risk, potential high reward if volatility spikes. All right, let's wrap up our deep dive on EVE Holdings Q3 2025. The key takeaways feel pretty clear. 1, they've secured the money, the financial runway through 2027 is there.
Yep, cash question answered for now.
2, they're showing R&D discipline, spending heavily but tracking efficiently within their guidance. And 3, they're now squarely in the critical flight testing phase. The focus shifts entirely to hardware performance and hitting that 2027 certification date.
The team's assembled, funding's in place, suppliers lined up. Now it's about performance.
Exactly. Time to deliver.
And maybe a final provocative thought for you to chew on. We've talked a lot about that deep Embraer integration, the supply chain help, the manufacturing expertise, those early aftermarket contracts.
Yeah, the Embraer advantage.
Right. But in this incredibly crowded eVTOL space, is that Embraer backing truly a sustainable competitive advantage against rivals who might be more vertically integrated? Or is it primarily just a way to mitigate some standard supplier and development risks that everyone faces? How much is that heritage truly worth when the technology is so new and the competition so fierce? Something to consider.
That's a great question. How deep does that advantage really run? Definitely something to think about. Okay, that's all for this deep dive. Thanks for tuning in. Remember, everything discussed today is for informational purposes only. It is not financial advice.
We'll catch you on the next one.